we warmly welcome Mr. Fahad at PIDE. Over to you, sir.
Thank you, Ji, for everybody's time. I know it's Friday, it's Ramzan. I appreciate it. So, just as a bit of a background, I used to be an entrepreneur before I joined the World Bank many years ago. And the biggest issue I had was access to finance. Um, I had set up a healthcare business, which was awarded as one of the top 50 healthcare startups in the world. We were invited to pitch to VC funds in the US. I think there were 50 companies invited from around the world. 49 of them had VC investors in them. I was the 50th. I did not, because the VC and the PE, private equity and venture capital market in Pakistan, were very nascent at that time. And so when we talk about risk capital, what I'm talking about is venture capital and private equity. And these are two basically forms of finance, which the venture capital looks at. So venture capital looks at high growth startups. It's a risky investment. They bet on businesses when they're very young, and they take stakes in these businesses. They help mentor them. It's not like traditional financing. In addition to money, there is support to them. And if the business makes it, then they make a ton of money. Um, Private equity looks at more mature businesses, and it looks at building efficiency. Private equity includes things like mergers and acquisitions of mature businesses. So when we clump them together, we're calling them what is called risk capital. I think when we talk about risk capital, we need to look at the underlying conditions within Pakistan. These numbers might be a bit dated, but uh, as we all know, Pakistan has this low investment, low growth paradigm. There isn't any investment being done, therefore we are not growing. It's something that Shujat Saab and I were discussing earlier. Why aren't our companies growing? You know, we see billion dollar companies across the region, and mushkil se, we have a few companies in Pakistan who have reached that status. In Indonesia, for example, I think there are between 5 and 10 unicorns. Those are startups which have reached billion-dollar valuations. I'm not even talking about mature companies right now. I'm just talking about startups. In India, we know the story. In Bangladesh, we know the story. So, you know, we seem to be stuck in this paradigm where there's low investment, there's low growth. And I think, you know, if we need to achieve our development goals and we need to move into if we need to develop as a country, one of the key barriers right now is investment. My understanding is there's close to 4% labor force growth annually. You know, that's a few million new young people joining the labor force every year, people like yourselves. And the question is, how do we make sure that people like yourselves go into high potential, high growth jobs? Clearly, some of the jobs that we have right now are not growing, and they're not providing that sort of growth within the market. And it's a whole ecosystem. We won't just, let's say, blame the private sector for not being in high growth areas. Our R&D, research and development expenditures per GDP are amongst the lowest in Asia. So if you don't have research, you don't have development, eventually you don't have innovation. And I say all of that as a precursor to the presentation, because essentially that is the angle with which I am coming from. For innovation to thrive, for jobs to be for job growth to be innovative, for companies to be innovative, one of the inhibitors is access to finance. There are a lot others. There are things like quality of research and development. There are things like access to different markets. My particular angle and spiel to you is on access to finance. Um, so in terms of traditional access to finance, Pakistan's private credit to GDP is 11%, which sounds like a number, but essentially what it really is, it's close to a quarter of the South Asia regional average. So we're essentially not having any investment in the private sector. Of all bank paper, 75% of it goes to the government. So what is happening is you have limited, let's say, revenue generation in the public sector. To fill their gaps, they're now tapping into the banking sector. So the banks, instead of investing in your startups and instead of investing in more mature companies, are sending 75% of all paper of all their money to the government. And of that limited 25%, if you were to put yourself in the shoes of a banker, would you rather invest it in a startup with an unknown commodity, or would you rather go to a multinational who you know has a 50-year track record? It might not be a high growth business, but you know they'll pay you back. So of the 25% of investment of credit that is going to private sector, it's mostly going to multinationals. So I say that to say that essentially you have very limited investment going into innovation. And whatever is going into innovation, or whatever investment is going into R&D, isn't seeing the light of day because you don't have private capital going that way. So I briefly touched on what risk capital is. It's basically it's an asset class. So we've got private equity that looks at more mature businesses. Um, I'll give you an example. There was a company out of Brazil that bought out some of the large food chains around the world. I'm forgetting the names of which one, but these are companies that are food restaurant or the restaurants that had hundreds of chains around the world. They bought them up, they consolidated them, kept their brand names, but then they eliminated their back offices. So that was an efficiency play. That's something that you see quite often at private equity. That a financier comes, they clump together companies that are similar. In India, we see it in healthcare. They buy up a bunch of hospitals and then they eliminate the back offices so that they save on administration costs and things of that nature. In venture capital, as mentioned, what you're talking about is basically early stage high growth. So one of the famous examples in Pakistan is Airlift. That story didn't end up working out, but you have others that have. And then you have what are called missing middle funds. So these are impact funds looking at moderate growth SMEs. And that, once again, Pakistan has a huge SME finance issue. Just to give you an example, 2014 mein, the SME borrowers from the banking sector, there were 200,000. Since that time, 200,000 SMEs borrowed from the banks. Since that time, we've had SME policies, we've had national financial inclusion strategies. And from 2014 to now, 10 years later, we went from 200,000 SME borrowers to 180,000. So actually, our number of SME borrowers in the country has, from the formal financial sector, has reduced. So SME is also part of the story of risk capital. And when we talk about risk capital, I think what is interesting is it extends beyond the life of a business. So, for example, one of you starts a business. You have an idea. You, let's say, don't have the money to, or you don't want to spend the money to implement the idea. You're pre-seed. So you go to friends and family, the angel investors, and you say, I've got this great idea. I don't have the money right now, or I don't want to invest right now. Or do you want to be part of it? And friends and family come in and they say, here you go, this is a friends and family loan. Or you find an angel investor and that business starts doing well. You might not be profitable, but you're having sales. So you're showing there's a proof of concept. So you go from pre-seed to seed. At the seed level, you realize that this is something that could really grow, high growth. You approach a bunch of VC companies. One of them says, you know what? I think you're going to be the next billion-dollar company. You are a unicorn. Here's a check. I get X% of your company. Now let's grow. And they give you a bit of mentorship. So it's not like the bank where they give you the money and then, you do what you do. It works out great. If it doesn't, make sure you give back the money. They are actually taking a stake many times in your company. And with that stake, they bring along global experts and they say, you are in e-commerce. Here's that person who did it in Brazil. Here's that person who did it in India. Here's that person who did it in Indonesia. Ask them, because for whatever we might think, at the end of the day, many emerging markets are very similar. And if it works somewhere else, it can work here. There's just about the minor tweaking. So that company works, it works well, it goes from seed to startup, and eventually it starts growing. And before you know it, you're a full-blown SME, you're making money, it's doing well. But at some point, you are not sure about where to go, how to grow your company. And you see that there's another business that's similar to yours that's captured other markets, and it would be amazing if you guys combined. And that's where then you have your private equity that comes in, and sometimes they buy you out, They combine the companies. Sometimes they invest, sometimes with debt, equity. And eventually, when you're a mature company, that's when you go to the commercial banks. And before you know it, you're so amazing that you go to the Pakistan Stock Exchange and you say, I want to do an IPO, and you're listed on the stock exchange. So risk capital kind of hits across the life cycle of businesses. It takes that risk with you as you are taking the risk, which I find very interesting. So as mentioned, you have angel investors. So these are friends, family, high net worth individuals. And they tend to look at debt or equity. They invest in high risk ideas, and they understand that, or hopefully they understand that it's a high risk, high reward. Then you've got venture capital, it's a specialized financial institution. So they manage funds. And they invest in growing and innovative startups who are at proof of concept stage. The angel investors are basically pre-proof of concept. That's just, you've got a good idea and I believe in you as a person. Venture capital, you've got proof of concept. You might not be making money, but you've got sales. There's some traction there. And private equity, once again, they manage funds and they look at mergers and acquisitions, expansion, and efficiency. So what are the types of financial instruments they use? You've got equity. So you've got a VC fund that says, I think what you're doing is fantastic. Give me 20%. Here's a check. You've got debt. I think what you're doing is fantastic. Here's a check. You have to pay me back in X many years. And the terms may be more constrictive than or more aggressive than the banks. It's because banks at that point will not take they will not take a bet on you. So when I had my own business, once again, we won all these awards, and I went to the bank and I said, I've won these awards. It was a chain of healthcare clinics. I was trying to be the McDonald's of healthcare. And I had 3 of them. And I said, I think this business will work if I have 10 of them. Please give me some money. And the bank said, oh, that sounds great. Show me 3 years of your show me 3 years of your tax returns. Show me your last 3 years of your financial performance. I said, well, the business started 7 months ago. I don't have that. And they said, great, good luck. See you when you're more mature as a business. So the banks basically did not want to take that risk on me. If you go to venture capital or if you go to VCs and they give you a loan, it's because they understand that there is a risk associated there. And there are different types of loans they can give. And then you have different sort of organizations which can give grants as well. I know Pakistan has, Karan Das, for example, has given grants at different times, if I'm not mistaken. I know the government has their own programs which give grants for innovative businesses. And then you have interest rate subsidies. State Bank has different interest rate subsidies that they run, which are essentially government programs. So basically, you can either give up shares of your company, you can take on a loan, or you can hope for a grant. Of course, grants are amazing, but it's very difficult to get. Now, when we talk about Pakistan in particular, why is this an interesting market? You've got, depending on who you ask, 200, 220, 240 million people. 70% are under the age of 30, give or take. Many of them live in urban areas. Most people in urban areas are quickly shifting towards smartphones. So what you've got is you've got this amazing ability to scale. So if you've got a tech-enabled business, all of a sudden I can target all of you because we are easily connectable, right? As opposed to back in the day when you had a brick and mortar business, how do I reach out to somebody who's living not just in the next sector, but in the next city, in the next province, in the next country? I think what the mobile phones and what technology has enabled us to do is to really scale fast. And that has given young Pakistanis, many business opportunities if you can catalyze it. Over the past 5 years, we've had close to $1 billion invested in the VC and PE sectors. We've had some regulatory reforms. We have these organizations like Ignite. There's a lot going on in the VC and PE space. But at the same point, when you look at the size of Pakistan, it's a lot, but it's not. So how do we grow the value of investments in startups and in the more mature businesses in Pakistan? We know that the enabling environment has issues. We know that FDI is a big problem. But this particular sector, the reason it matters is if you can catalyze this, there's high growth potential. I think the startup sector, it gets a lot of shine because if it works, it can really work for you. It can really work for countries. And I think that that's what makes it very interesting for me personally. So if you look at Pakistan's VC sector specifically, the table on the left, I don't know if you can see it or not, but this is VC funding per capita. India is close to $30 of VC funding per capita. Thailand close to 20, Indonesia 13, Vietnam $6.50, Nigeria 4.5, Egypt 4.5, Bangladesh $2.50, Pakistan is close to $1.50. So essentially, VC funds are not coming to Pakistan. It's a largely underdeveloped and underfinanced sector. And when you combine that with the R&D statistics that we mentioned, essentially you're having very little investment happening in innovation. And if you don't invest in innovation, it'll be very difficult for you to get those high growth jobs, which we need for Pakistan to reach its development goals. In 2021, it was 0.000, that 305% of global VC funding came to Pakistan. It's understandable. You know, you have places like the US, like India, like UK and Europe. But the main message is Pakistan's innovation sector is highly underfinanced. And as mentioned, we've had close to $1 billion over the last 5 years. What you've seen in 2021 and 2022, and now this drop off has happened globally. What has happened is as interest rates have gone up in the US, a lot of institutional investors have decided not to invest in the emerging markets because they have better opportunities in the US. And that sort of investment has dried up in places like Pakistan. In Pakistan, in particular, because of many of the other issues that have happened, and I don't need to tell you guys, you know much better than me, the macroeconomic situation isn't fantastic. So if you were sitting abroad and you had $1, you might not say that I want to invest in this place right now. You might choose other localities. And that has been sharply felt by startups. And it has been especially felt by the financiers of startups. So if you are a VC fund and you're looking to raise money so that you can invest in startups, your access to finance as a VC fund, as a PE fund has really dried up. And so if you don't have money, then you don't have money to invest into startups, right? So in addition to access to finance, you have regulatory issues. If you are a foreign VC, there are capital controls that have been going on. So if you invest in a company, that company does well, how will you take your money abroad, right? If you're domiciled in X, Y, and Z country, in Europe, in South Asia, or wherever you are, if you're outside of Pakistan and you cannot take your money as an investor, you would not invest in this country, right? So I think there's a few key constraints. And what that means is they do this poll every few years, and Pakistan is among the least attractive peer countries for VC and PE. So this is all the basically bad stuff in a nutshell. There's not enough money. We're not investing in R&D, and people don't want to invest in Pakistan. So where do we go from here, right? I think one avenue, the traditional capitalist might say this is a private sector area, let private sector figure it out. And I think that makes sense where there are not market failures. I think there is a market failure in Pakistan because access to finance is such an issue. And we've seen it in SME, we've seen it in agri, and now we're seeing it in high growth, high innovation companies. So that is why in many countries around the world, the public sector has come in to fill this market failure. So even in the most mature risk capital markets, we're talking about the US, Europe, China, for decades they have been investing in high growth and innovation led financing. So what are the reasons they invest? I think one, it's because they realize that there's a funding gap. And if you want to increase investment into high innovation companies, you need to address that funding gap. Two, most countries around the world understand that fostering innovation, fostering entrepreneurship is a quicker route to development. Three, it's job creation. I'm going to give you some statistics which at least blew my mind on the impact of risk capital around the world. Um, Economic development, there's also a technology transfer, and I think that's very important for emerging market countries. It helps us, leap faster. And four, I think, or six, I guess that is, there's reverse brain drain. I think what you're seeing in India, for example, is very, very interesting. What you're seeing in Bangladesh, you now have non-resident Indians who want to work in India because they see high growth opportunities there. They want to leave more established jobs because they want to take that risk for those potential rewards. I mean, where in the world do you have, as a business person, now put yourselves in the shoes of a business person, you have an idea and you want to make money. Where in the world are you going to get hundreds of millions of young people who are tech enabled to use your product? The opportunities are here, right? So now it's upon the public sector to help cultivate and build that enabling environment so that you want to set your businesses up here. And once again, one of those enabling environments is access to finance. So when we talk about job creation, there's a few statistics which I wrote down, which I really, really wanted to share with you, which I found super interesting. In India, over the last, between 2016 and 2021, there's $60 billion invested in risk capital. 60 billion. Just to give you, that previous slide, in Pakistan over the last time, there's $1 billion close to it. That $60 billion has yielded close to 800,000 jobs, right? And these are high quality jobs. Yes, you do have, the food panda delivery driver jobs, but with that, you also have the back end engineering jobs. You also have people who need to do sales, who need to look at the fintech part of it. So many of them are high quality jobs. In Europe, there were 10 million people hired across 23,000 risk capital companies in 2019. And employment in these companies grew at 5.5% annually, as opposed to under 1% for traditional companies, right? So these companies are growing much faster than your traditional companies. The OECD had a statistic that transformational startups, so around 4% of startups, are creating 20% of new jobs annually. Think about that. A fifth of new jobs are coming from a sub-segment of startups which have suddenly become transformational. So what is happening is the public sector, through their support of this of risk capital, is essentially ingraining innovation in these economies. In an ideal world, the public sector wouldn't have to be involved. You, as young students, would be able to say, "I have an idea, let's go do it," and eventually you'd approach a financier and you'd be able to get financing. But because there is this market failure, it's more and more difficult to do that. This is why the public sector needs to be involved. So there's interesting models out there. You've got Israel's Yozma model, which it was a fund of funds. So what it did was the public sector capitalized a fund, and then if you were a VC or a PE fund, you could go to that public sector fund and say, "I need money. I will raise X% from the private sector, and I will get X% from the government." Right? That was one of the early ones. The Scottish venture capital fund has done the same. The Baltic has done the same. And now we're seeing this across the MENA region. So essentially, and I'll just repeat this, the government, one of the tools is they set up a fund of funds. So it's an umbrella fund. You have a VC fund. Your external resources have been tapped out. You can no longer go to a fund in the US and say, "I need some money because I want to invest in startups." You approach the government and say, "Government, you have this fund of funds. You can invest in me as long as I bring XYZ% from the private sector." So one, you are supporting job creation indirectly, and two, you are mobilizing private capital. So now if that VC fund approaches a private firm, they know that the government is next to it. It gives them a bit of ease. You're de-risking them by basically crowding in public and private funds. Um, and this is different than traditional tools. Traditionally, how did you support startups? You did it very directly. So there was a government there was a government program. You have a startup, you send in an application and you say, give me a grant. So there's somebody sitting in a secretariat in whichever building who says, well, no, I think this is good. No, I don't think this is good. Give them some money. And God knows what their capability is or capacity is to understand your business. And what ends up happening is really innovative businesses, because they're more difficult, they're riskier, they end up getting crowded out. Whereas traditional businesses, because it's easier to understand by the grant giver, says, you know what, give this person 10 lakh rupees. And your innovation basically is not financed in the end. So if you look at the aggregate government funding programs, it is in fact at par with what private sector has invested in VC and PE over the last, I believe this is over the last decade. So globally, government is providing financing to risk capital operators, VC funds and PE funds. So this is not just in places like Pakistan, this is around the world. You know, Sweden, it's really, really interesting. Sweden is, after Silicon Valley, it has the, I want to make sure I say this properly. Sweden, after Silicon Valley, has the most, I believe, billionaire. They have the most billionaire tech companies per capita. Right, there's a country of 10 million people. They've given you Skype, Spotify, Klarna, which is one of those. Klarna is, I think, it's a buy now, pay later. And the Swedish government has been working on risk capital since the 1970s. This is a highly advanced country, but they are still investing in the sector because they feel that if you help finance or capitalize VC and PE funds, they will onwards invest into businesses that will do well. So the World Bank has worked on risk capital globally. MENA is a place which has been under focus over the last few years. And so what they're doing is they're setting up basically these funder funds. The government has borrowed money from the World Bank. They capitalize these funds, and then they support VC and PE funds. They've done it in Morocco. They've done it in Tunisia, in Egypt. They've done it in the West Bank and Gaza, which I find very, very interesting. And I can share those documents with you guys if you're interested. Lebanon and Jordan. And so what the bank projects have realized is there's the access to finance bit, there's also the ecosystem development. So you can give money to VC funds, but if the demand side isn't coming, if businesses are not mature enough to actually approach a VC fund, you need to help them actually become more mature as well. So if you're a startup, you have a great product, but you don't know how to sell, you might not be the right person for a VC. So I think the bank programs have been working on ecosystem development as well. So they're supporting the supply side by making sure there's finance, and supporting the demand side by making sure there are businesses that are good enough to actually approach the VC funds. And so basically, if you are able to see the three boxes on the left side, they're providing that anchor financing that goes to the VC and PE funds. They're providing deal flow creation and ecosystem strengthening. And then finally, it's about fund management, because if you have there's 8 VC funds domiciled in Pakistan. They're first-time fund managers. If they are managing large sums of money, they need to know how to do it properly, right? You don't want to invest all your money in one company. You want to take the right bets. You don't want to invest too much early on. You want to structure your deal right. When I was an entrepreneur, I was looking for, I can't even remember how much money. If I had gotten it, I wouldn't have been able to spend it properly. I needed somebody to say, you know what, Fahad, take 50%, do X, Y, and Z, then you will be ready for the next 50%. So fund management isn't just on the financial side, it's also on how to work with startups. These are not established companies. You don't have, once again, when you run a startup, you are the CEO and the janitor at the same time, right? Because these are small businesses. Uh, you're doing everything. You don't have back offices. You need somebody to help guide you as you build your business. Who are the right people to hire? What type of experienced people do you want to bring? I remember there was one startup which is doing phenomenally well, and they hired somebody from a traditional multinational to come who was fantastic at their job in the traditional multinational, but they didn't work out at the startup because it's a different sort of grind altogether, right? You are working in a high stress environment. Sometimes you're not paid well, sometimes you're not paid on time. I mean, anything can happen on a startup, right? So I think VC funds, they need to have more than just money to dole out. They need to really mentor you, they need to connect you. There's a job that I saw in one VC fund a few years ago. I think it was called head of community. So I said, well, what's that? I met the VC, the founder of the fund. He said, I've invested in 50 companies. They're all in different spaces, but they face the same issues. It's highly stressful. They're new businesses. They don't know how to describe it to people. It's your own business, so you are 24/7 on it, or you're a new, you're employee number two, right? So these VC funds have set up what they call community, which is once a week, once a month, everybody come, let's just have a meal together, right? And that, so I give that example to say that VC and startup, it's a lot more than financing. It is really about community. When I was an entrepreneur, one of the biggest things I felt was, for example, loneliness. There was nobody who I could talk to tell them, yeah, I have this business. Everybody thinks it's amazing because I won these awards. I don't have money and I'm losing money. And because traditional people who have traditional businesses, they don't understand, right? You don't get paid regularly because it's a startup. And I'm not trying to discourage you. I'm trying to say these are really interesting things. But when you meet other founders, that's really when you get to share. It's like those, networking events. So I think what startups provide is a lot more than just money. So if the public sector wants to work on a risk capital program, I think in addition to a fund of funds, so anchor funding for these child VC and PE funds, so you've got the parent fund and the child funds, you need to work on the deal flow and you need to work on the ecosystem, right? So one of the questions on risk capital is historically, governments have, and we touched on this earlier, and sorry, by the way, I'm talking on and on, this is going to finish soon. Um, Historically, governments have done direct funding. So you would approach Ministry XYZ and say, you have a program, I have a great startup, please invest in me. And I think if you look globally, the best way is indirect investment because that public sector officer might be amazing, but entrepreneurship is not their core competence. VC funds, PE funds, it is their core competence. They work with entrepreneurs day in, day out. So I think the best method to run a government program is in fact indirect. It is crowding in the private sector. So not only do you bring your money, you can take some of our public sector money, you bring other public sector money. So I think one of the funds in, I'm forgetting which country in MENA, if you want to raise, for example, $10 million, you get 6 from the public sector, but you need to bring in 4 from private sector investments, right? So if you go through the private sector, you crowd in private sector money and you crowd in private sector expertise. So instead of investing in your startup or yours or yours or yours, the government says, you know what? You are best placed because you run this business. You know about it. I will give you money. You invest in startups, right? So you've got anchor funding, which is indirect, and that allows you to bring in the core competence of the private sector. And the other thing is you then create, I think, you are able to create a technical expertise in the private sector because eventually the government doesn't want to be doing these things itself, right? You don't want to be in a situation where the government is doing everything. You want to inculcate this sort of expertise in the private sector. So yeah, we've had great examples in Egypt. We've had great examples in Jordan. In Jordan, I think one of the interesting things they've done is the fund of funds doesn't just invest in Jordanian startups, it can also invest in global startups, which I found very interesting. So the money has been borrowed by the government of Jordan, and they allow you to invest in global startups. So while I think most of the money is invested in Jordan, as a result of this, the government of Jordan, through their fund, now has exposure to Silicon Valley-based startups because they allow that money to be invested outside of the country. That's something which I think is tricky in countries like Pakistan, where you do have a lot of questions on public sector expenditure. Where is the money going? I think that is another issue with the government being involved. These are highly risky assets to hold. So we would really have to reform how we look at risk capital if the government wants to be involved. We do have two fund of funds that are being created right now in Pakistan. I believe so. I believe the PPP authority at the federal level is looking to make one. The government has capitalized it or has intended to. And I believe the second is Ignite. Ignite, from my understanding, and these are early days, I think is looking at more of a direct approach, whereas the PPP authority, from my understanding, is looking at the indirect approach. So it would support child funds and have some direct as well. So sorry for the rant. It's a topic I'm very passionate about. Um, Thank you for your time. If you have any questions, please let me know and enjoy your Friday.
It was really a wonderful presentations. I really enjoyed it a lot. I have one question. By the end, you have mentioned the responsibilities or the structure of public sector within the Pakistan. Specifically, I am working on my research project, the privatizations of SOEs, state-owned enterprises. Like in the end, you talk about that these are very strategic assets of the governments, and governments need to be very careful about by involving the private sectors into these particular assets. But if you look at the role of the public sector, day by day, their expenses they are expending, and if you look analyze their expendings, they have major chunks going for pensions and pays, which are increasing day by day. Within, I analyze their yearly report. I am working on the public sector, that is railway. So their pay and pensions are increasing day by day. So rather than government and yearly basis, government are investing more and more money in form of subsidies to just to overcome their losses. So there is no innovations in the sense we didn't observe any innovations in the public sectors like in railway, in PIA. Neither they are providing space to any private sectors because of the leakage, because of the limited funds. So what you see the futures of those public enterprises as they are the barrier. You talked about certain situation that the public should provide the space to the private capital, should provide private investment. But if you look at the case scenario of Pakistan, it is totally opposite. Then if you look at the public sector businesses, they have totally bureaucratic mindsets. So in bureaucracy, they come up with the training with zero risk. But if with entrepreneurships, you have to learn how to take risk. Like you talk about the risk capitals, so they are totally opposing ideas, contrasting ideas. So how you analyze this case scenario?
So I think firstly, completely agree with you. I mean, this is my personal view, but I think that unless there's a market failure, I think private sector should be running private business. This is my personal opinion. Um, that being said, of course, it is not the situation right now in Pakistan. We do have a lot of large SOEs. I think going forward, and you touched on this, the role of the government in many of these businesses, especially in entrepreneurship, should be to crowd in private capital, because right now private capital is running away from proper SMEs. Forget innovative companies. Private banks are basically almost disintermediating right now. So I agree with you. I think the job, my personal opinion is that unless there's a market failure, private sector should be running businesses. I think privatization is a very important step. I think the enabling environment does have to be there, though, for privatization. Privatization is amazing. it needs to, but it's amazing when it's done properly. So I think that's a key step in this. And I think the other thing that you mentioned in terms of, I'm a core believer in core competence. I don't think that government should be running business. I think that private sector should. And where private sector doesn't have the competence, that's where government can come in and help impart some wisdom upon them, help train them, and then let them lead from the forward.
My name is Asif. I'm a student in development studies. My background is in finance and accounting. So my question precisely is what we're talking about. That is, when should the government actually come in? So we talk about market failures, and then we look to the government to correct those market failures. And at the same time, we don't believe in the capabilities of the government, right? So it's like a dichotomy. What I want to look at is how can like private sector and public sector create shared value. So we have people that, we should have people in government. Our government should be structured that way that we should have competence at the core of it. So there must be people जो कहें कि okay, हमें पता है कि business कैसे किया जाता है, और हमें ये भी पता है कि क्या चीज हम कर सकते हैं कि इस चीज को help करें. So we have the competence. You have the competence, the private sector, and you also have the capability. So how do we come closer and create shared value?
I think if you can answer that question yourself, then you would be doing a great service to Pakistan, because that's something I think everybody is thinking about these days. So, I think there's a number of ways where government and private sector can work together to create value, right? We've got historically public-private partnerships. What I've described as fund of funds is essentially government capitalizing a fund of funds and telling VC and PE funds that if you tap into this, you need to bring in private capital as well as experience. Pakistan has a history of PPPs. Some have worked, some haven't. The question on how to do it, I think everybody is struggling with that, right? So you've had amendments in the PPP Acts. You had a lot of private sector people, for example, on the boards of SOEs to reform them. You've had some really, really good people who've joined. You mentioned SOEs. You've had really good people who've joined the boards of these SOEs. If you look at some of the PIA directors, the board of directors over the last 20, 30 years, they're captains of industry, people who have turned around their own businesses, right? Similarly, if you look at some of the other SOEs, there are really people that you would say, if I want to run a business, I would want this. Yet somehow it's not working out on many of the SOEs. So I don't know how you properly structure that framework to bring in public and private sector. But I think one thing is critical, that we have to avoid public sector crowding out private sector, because I think that is one thing that does end up happening. So if we're right now looking at bank financing, for example, investment is key to any growth in Pakistan. 70%, 75% of all bank money goes to the government, right? So that's a clear crowding out. So if you have a business idea, even if you're a successful entrepreneur, it's like pulling teeth trying to get a loan from a bank, right? And why wouldn't it be? Because if you are a bank, you are a private sector business. And if you studied finance, what do they always say? The job of the company is to maximize shareholder value. So you go where the money is. So I think somehow or the other, however that shared vision is done, one, you are right, it has to be shared, or maybe in fact not even shared. I think sometimes it has to be led by the private sector and enabled by the public sector. But however it is done, we have to make sure that one, we don't crowd out the private sector, and two, we don't have capture within the private sector. I think one of the things that has happened is historically we have this elite capture also within private sector policies. So the policy might be very good, but for a very small sub-segment of private sector. So I think however that framework works of how the government supports private sector, we have to avoid crowding out. We have to avoid capacity being diminished, right? Government needs to slowly hand over to the private sector so they can also grow their capacity. And thirdly, I think we have to avoid elite capture within the private sector. I don't think I answered your question. I just think that it's a very, as Pakistanis, we have to figure out how to build that framework of how government can support the private sector, because clearly, as of now, it isn't working, whether it is on the financing side or if you run a business. I've talked to many business owners, they're unhappy, for example, with the quality of their employees, right? So the people who are being trained aren't being trained for the work that there is, or they don't we don't have great governance practices, right? We have so many stories where private sector is unable to go from one generation to the other. We talk about state culture. So there's so much the government needs to help to create that enabling environment so that private sector succeeds.
I want to ask, you have mentioned some advantages yes, Pakistan has, but similar advantages already China and India also have. So, if I ask my question more precisely, that why RCs or VCs will come to Pakistan when India is sitting here in the region and China is already sitting here in the region? And or if I ask it more directly, with this much sludge and regulations, why RC and VC? And I believe there must have to be some comparative advantages that Pakistan has over China and India.
So I think the first one is, and I think that's a great question. If you're talking about businesses that are competing with each other, let's say I'm targeting there's this big business article on medical billing. So it happens in the US, and they outsource back office in places like Pakistan, right? So if you're a Pakistani business competing with an Indian business or a Vietnamese or a Chinese, and then you go for financing, yes, they would look at comparative advantage. But I think what Pakistan has really going for it is, and what Pakistani entrepreneurs have going for them is, Pakistan is a booming market itself in terms of population. And nobody knows Pakistan like a Pakistani, right? So if you're targeting those 220 million people and you are setting up an e-commerce business or you are setting up a logistics business, you would know this area, these people, probably much better than somebody sitting on the outside. So I think the comparative advantage to Pakistani entrepreneurs is that Pakistan is a huge market and it's untapped. It is untapped. That being said, of course, there's a lot that needs to happen on the enabling environment here. And we've seen that in fintech, for example. In fintech, we have a lot of Pakistani businesses, but now we have a lot of foreign fintechs that are looking to come into Pakistan because they see that value addition of being here. So our comparative advantage within Pakistan is that we know it better. Abroad, probably our comparative advantage to many countries is we're doing it cheaper, right? And also there's been an evolution. You look, for example, my understanding is that many Indian software houses, for example, are now moving beyond just creating a website or doing social media ads for you. So I think as other countries evolve, that leaves a gap of areas where you can be in, and then when you capture that, then you also try to evolve to get to the next level.
आप देखें कि आई नो समबडी के जिसने जो आपने एंजल इन्वेस्टर वाली बात की, तो किसी ने 80 लाख 4 साल का बल लिया, अब उसने 2 करोड़ 40 लाख उसको वापस किया, बट दैट एंजल इन्वेस्टर इज नॉट हैप्पी बिकॉज ऑफ दिस इन्फ्लेशन थिंग. उसको लगता है मेरा पैसा डूब गया. अच्छा, देन जो सिक्योरिटी के इश्यूज हैं यहाँ पे, तो अब आप मुझे यहाँ ये कमेंट कीजिए, बताइए कि क्या आपको लगता है कि गवर्नमेंट इस मार्केट फेलियर को दूर कर रही है कि आया इस मार्केट फेलियर को क्रिएट कर रही है?
I think without commenting on your last point, what I will say is what I will say is कि जो fund of funds वाला idea है, essentially what that is doing is addressing a market failure, but telling the private sector to do it and supporting the private sector to do it. So instead of saying there's a market failure, startups don't have access to finance, ये लें, ये 20 लाख का चेक ले लें. जो we hear कि, you know, इस ministry ने कर दिया, इस ministry. What it's saying is, here's a fund, you VC fund, you PE fund, you tap into it, and you support these startups. So I think जब market failures की बात आती है, and this is something we talked about earlier as well, I think the best role of the government is where they enable the private sector to address that market failure. And that's what I've tried to, in a muddled tariqa, and apologies for that, present with the fund of funds. Okay, there are solutions within innovation financing, which the government can crowd in the private sector. And one of those innovations is the fund of fund. But I think overall, as I've said before, I think addressing a market failure isn't easy. And I think we haven't been always very successful at it. But what the MENA experience has showed us in risk capital, for example, is that if you crowd in private sector, they are able to better address a market failure if you leverage them. So one, you've leveraged private finance. So आपके सारे, so I think पता नहीं कौन सा मुल्क था, 50 million का anchor fund था, fund of funds, and total they were able to get 200 million in the market, right? So they are a leverage of 4x or 3x or जितना भी था. So one, you've brought in private capital. Two, you've been able to help support these funds who invest in startups. So their ability to pick out good startups is much better. Three, you've enabled a lot more financing to go to startups. So this is just a small example of government addressing private market failure by bringing in private sector. So I mean, my personal opinion is that private sector has to lead our. I mean, once again, this is my personal opinion. I will an ex-entrepreneur. It is in my DNA that I think the country will move forward if we are able to get our private sector to work. That's my personal opinion.
Sir, just a quick comment. The biggest issue, according to me, in case of Pakistan, is actually lack of integrated planning. Like if we look at the example of universities and other businesses, we have, I think, lack of collaboration between businesses and institution and universities. If we look at the market in 2010 to 15, we have flood of IT expert, but there is no need. And on second, if we look at historically, privatization ने just job creation ही की है और वो भी lower level पे. तो इसके अलावा privatization का क्या कोई role तो नहीं रहा historically?
I think one, and of course this is being questioned now as the banks have been co-opted by public sector, but the banking sector is one big example of privatization working, right? And when the banks were privatized, they had high NPLs. They had invested in a lot of, those types of things. I'm a very important person. I have a bad business. Mujhe paise do and I won't pay you back. I think by and large, Pakistan's banking sector has now evolved a lot, and that's because of privatization. So that being said, of course, privatization is not the answer to all your woes, but it is one of the key pillars, I think, on the SOE side. In terms of collaboration, 100%, even within risk capital, you see that there, tax policy matters, planning matters, state bank remittances matter, SECP, how easy is it to register your company? One of the businesses I set up, I lost money for 3 years, which was terrible. And at the end of 3 years, I shut down my business. For 6 years, I would get notices from SECP. This is a personal story, to pay taxes annually. Now, this is a business that not only did not make money for one day, it lost money every day and then shut down. But somehow or the other, in this system, I was unable to, everybody told me don't register, right? But I think that it's very important to register businesses. And when I did, I got captured and they didn't let me go, even though my naukri pesha ho gaya tha. So, registration matters, ease of registration. I think SECP has done wonderful work around there. They've done a lot over the last few years. Remittances matter. State Bank has looked at the FE law. How do you incentivize a business domiciled in Maldives, a fund, to invest in XYZ startup if they can't take their money out, right? So State Bank matters. FPR, are there special tax considerations? I'm not saying they're not, but are there special tax considerations you should give VC and PE funds? I don't know, but that's something that, so they do need to coordinate, and I think that's something that you are well aware of. And
I'm on MPhil Development Studies and ACCA member. Lighter comment on the FBR notices or SCCP notices that you were getting. Probably they were not asking you to pay tax; they were asking you to file a return, even if it was a nil return. Anyways, question is that how can government crowd in funds? I mean, is it by coercion or by subsidies? When you were talking about that Jordanian fund, I'm interested to know what was their borrowing rate and at what rate they were investing. And do you really think that all these startups will necessarily lead to bridging the gap between haves and have-nots? I mean, if they are not going to bridge any gap, why should government invest in them?
so I think that's a very good question. So I think, and you're right, I was getting notices to file. But even irregardless, when the business failed, I wanted to stop getting notices at all. I wanted to forget that business ever existed.
Business.
So that process took years, unfortunately. Turned out, by the way, in the end, that the letter I sent to deregister, it didn't get to them, or their letter that they sent to me didn't get to me, and that was so it's done now. Shukra. I think in terms of crowding in private capital, I think one of the things to recognize is that there are risks in not only investing in startups, but there are risks in investing in nascent markets, right? These are very small markets. So private investors, VC funds would have trouble investing without maybe this kind of hand around their shoulder, right? So what has happened in MENA is in the Middle East and North Africa region, slides are down, but by setting up the fund of funds, they have incentivized that in itself is an incentive.
No, but why should the government incentivize accumulation of wealth by the private capital?
So I think, and that's kind of that job creation story there, right? I mean, there is, if you ask me, there is a story around there that innovation. No, but I think there's an innovation story there, right? I think innovative businesses lead to high job growth, and we've seen that, right? So in India, 800,000 jobs over the last 5 years. In Europe, there's once again, it's an OECD statistic. I would love to see the background data behind it, but 4% of startups that they've called transformational bring 20% of all new jobs. And then from a Pakistan perspective, I will not comment on it either way. I'm just positing a question there to a policymaker that is it worthwhile investing in innovative businesses because they may yield in a high growth jobs and high growth companies. So I think it is to answer your question, it's not an easy, if you're a policymaker and you have only $1 and you're looking, is it a stunting issue or is it a startup? Then yes, I mean, it's a very clear answer. And I think at many times that's where we are. But you are also spending a lot, for example, on private sector. You've got interest rate subsidies, you've got grant schemes. So I wonder if it's better to spend that money through private sector oriented setups.